Hello everyone, it's great to be here back at Wild Digital in KL. I'm going to talk today about dipping into a $2 trillion pool of capital. And now when I thought about this, I was given this title like another presenter today. I thought, well, I might build up to this by giving some clues about the location of this $2 trillion pool of capital. But I've got a feeling the first clue might give it away. Correct, yes, it was Australia. Australia is where this $2 trillion pool of capital is located. It's the pension fund assets of Australia, which is quite extraordinary for a country of 24 million people. Another really interesting thing about Australia is that it has a world record for the longest number of years of economic growth, continuous economic growth. So no recession in Australia in over 26 years. All this is really taking place in an environment which has a robust regulatory system. So it's a great place to raise capital. What I thought I'd do today is actually talk about how you access this pool of capital, and what that actually means for tech businesses seeking funding. Just to put all this into context, you can't see the actual numbers, but I could tell you Australia's $2 trillion under management. But the important thing here is the ranking is still shown. So Australia has the fourth largest pool of capital of any country in the world. What's really interesting about this, though, is two things. One, it's had some great growth. So it's had sort of CAGR of 7.1% over the last 10 years, which puts it in the top 5 pension markets in terms of growth. This is growing to around $7 trillion US by the year 2035. So this provides some great tailwinds for the capital markets in Australia. And it's partly due to the fact that the government introduced compulsory superannuation back in 1992. So effectively 9.5% of everybody's salary goes in to feed the pension system. But the other key thing about this is that about half of the money goes to equities. So half of that sort of $2 trillion goes to equities. Of that, the majority is mandated to invest in ASX-listed stocks. So to access this money, the best way to do it is to list on ASX. So the Australian Stock Exchange is a top 10 stock exchange in terms of size. It's got sectors all represented, so across all sectors, financials, resources, and so on. But the most important sector in terms of growth over the last 5 years has been technology. So that's really been where the growth engine has come from in terms of new listings. The other thing about this market, though, is a main board only. So you don't have the junior markets like you have in London, the AIM market in London or Catalyst in Singapore. It's just one main board, which maximizes the number of investors that are able to invest in you. So there are mandates, for example, of fund managers that simply cannot invest in junior markets. We don't believe in the junior market model, we just have one main board. The other thing about the market is it's very much a small and mid-cap market. There are very large cap companies, there are over $100 billion companies listed on ASX. But in terms of activity and number of listings, we see the most activity in the small and mid-cap space, and it is genuinely a market where you can list a small and mid-cap company. So also in terms of capital raised and number of listings on a global basis, ASX ranks in the top 10, as you can see here. But you'll notice as well, though, that the capital raise is actually lower, but the number of IPOs is actually quite similar to the major markets around the world. So, of course, that just reinforces the fact that we list generally smaller companies on the ASX far earlier than you would on NASDAQ, in fact. But these are really big numbers. So I just want to drill down into these numbers and what it means for tech companies and tech companies in that sort of size, small and mid-cap size range. So for this, we looked at companies that have IPO'd over the last 4 years, $500 million market cap US and below. And as you can see, the ranking is very different on this basis. ASX, in fact, ranks third on this basis. But But the really interesting thing about this is that the number of listings is, over this period, the last 4 years, is 85, but 30% of those companies have come from countries outside of Australia. So companies from offshore, foreign listings, in effect, on ASX. All those other markets are pretty much home market listings. So all the companies that have listed on those markets are pretty much from the home market only. So ASX is a great market in terms of cross-border IPOs for tech in this size space. What this means as well, though, if you can list at an earlier stage, and really just as a guide, we're talking about, as a starting point, you can genuinely list at around Series B and later. So if you think of it in that context, it's another funding round, so it might be an alternative to private funding at that point, but it also could be an exit strategy ultimately for VCs that are currently in the company. Index inclusion is a really sort of key selling point of ASX, and really the point here is to say that you get into the index far earlier if you list on ASX than you do on any major market around the world. So for example, if you want to list in the US, and you want to get into the S&P 500, you've got to be a $5 billion company. Whereas on ASX, you can get into one of the major indices, the ASX 300 at $300 million. So again, that just sort of reinforces the fact that you can get in and get attention from institutional investors at a far earlier stage in your business. And the last 5 years in particular has been a great run in terms of tech listings. So the peer group actually on ASX in tech has effectively doubled in the last 5 years. It really started around sort of 2012 and so on, where you might remember Facebook listed in the US. We had a company called Xero, an accounting software company that listed on ASX at that time. But ever since then, that really marked a turning point. And so back then we had sort of traditional IT services companies listed, fintech, online marketplaces. But since then, it's really broadened the subsectors. So we've seen cyber companies, IoT, AI companies listing on the market, and lots of SaaS businesses listing in this peer group. As I mentioned before, it's also a market for foreign listings. So in terms of the number of tech companies we've got listed currently, so it's around 230, 50 of those are foreign. But this is listings across the board, across all sectors. You can see the biggest cohort comes from New Zealand. But something that really validates the tech model, we feel, is the fact that we've got 44 companies from the United States listed on ASX. And actually, I tell a lie, as of Monday it was 45, because we had a Silicon Valley-based company called Pivotal Systems list on ASX just then. So, and what we see is this comes from two camps. So you've got companies coming from the US where they might prefer public market to another round of VC funding, but they're too small for the local market. So they might come to ASX, and that's the case in many of those 40 or 45 or 45 companies listed from the United States. But the other countries are sort of, as we call, sort of island states in a way, because they have often very low peer groups in their local market in tech. So, you know, Singapore, Malaysia, New Zealand, and Israel fit into this category. There are lots of key ingredients to consider to make an IPO successful. Some of the obvious ones are having a compelling growth story and a backable team and so on. The listing process itself takes 4 to 6 months, so you need to dedicate the time and effort to actually execute. But I often get asked, at what stage can you list on ASX? So I alluded to sort of Series B earlier, and I don't want to anchor you too hard to numbers, but if you're thinking in terms of metrics, and there are exceptions, but I would be thinking around sort of $10 million or more in revenue, growing a top line of maybe 30% or more, raising $10 to $20 million, with a valuation of, say, 50 to 100. So that's a really good starting point in terms of an ASX listing. So you can see from those metrics, there's a bit of crossover there where VCs might be coming in as an alternative or indeed exiting as well. Another thing to consider is that it is a fundraising event. So as a founder, it's not really for founders that want to get out, it's for founders that want to take the company to the next level. And finally, as a sort of foreign company, you don't necessarily need a connection to Australia to list there, but you do need to visit. You do need to have a commitment to an investor relations program, and it's a good idea to have a local director. So just to give you an idea, the CEO should be in Australia visiting analysts and investors around 3 times a year. So you need to commit all this stuff up front, but the benefits can be quite substantial. And another key ingredient is you need to come in and ring the ASX bell. Many entrepreneurs say to us that this is the best day of their career. Some even say it's the best day of their entire life, but it's really the main point here is to say this is the start of the journey. This is really a PR splash. It's the start of the journey to take your company to the next level. So in summary, we have a $2 trillion pool of capital in Australia. It's only one flight away from here. In terms of tech companies, you can access this money by listing on ASX, and there's genuine demand from investors in Australia for tech companies, especially from Southeast Asia, especially from the US, and so on. Thank you very much for listening. My name is James Posnett, and come and see me later if you'd like to talk about listings. Thanks.